Good evening, everyone. This is going to be my analysis for the week commencing. This is Sunday evening in the UK for Sunday night, the 22nd of March 2020. And I'm going to be having a look at the global indices. So obviously this week continued to fall lower. A lot of that really through as a result of two things. We've got two things happening concurrently. One is obviously an economic crisis. The second thing is going to be a pandemic, which is a very serious pandemic. Please, if you're not taking it seriously, please just, whether you believe in it or not, you got to take it seriously, okay? Rather err on the side of caution. And please be careful and be sure to take the necessary precautions. This is a very serious problem. It is actually, aside from global warming, it is the single biggest threat to the human population, and has been for the last 20-30 years. Because of our dense population, illnesses can spread through the density, and therefore things like the bird flu are always a fear. But this kind of thing is always going to be a problem for us until our population is back under control. So this is a real problem. Just take it seriously. So all right, so I'm looking at the Dow. There's a couple of things that I want to talk about fundamentally while we go through this. Okay, so the Dow is obviously broken through. I spoke about these two levels, areas where it could potentially find support. Fell right through that, and it's coming down towards 17,200. Trump was ultimately finished his presidency here. Obama finished his presidency in this period here. This was the presidential election period, and then Trump took over. And so you can see we've pretty much kind of returned back to pre-Trump era, which is on philosophically a good thing. I'll explain why in a moment. Then let's have a look at the S&P. Okay, so also falling very dramatically, and therefore starting to break through these levels and looking as though they very much have their eye on the next few levels. The speed at which the market is falling is historic. Okay, that's quite historic. Not ever happened before, and so that makes trading very difficult. For individuals that are buying at this point in time, it's more of an investment approach, so that they buy and hold and then hope to make it back within a couple of years. But for traders that are looking to buy at this point, it's statistically probably a very, very bad idea. I'm more likely to probably short the market aggressively or shorter term trades than I am to look to buy. But what I am noting here is that it's very overextended, and I keep saying this the last few weeks, overextended, and therefore at some point I do expect it to pull back up. I'm currently, any trades I have taken have been on 1 hour, 30 minutes, and 4 hour time frames, because they're much shorter, keeping an eye on these key levels. We've broken through the key level, and I want to see if we continue to head down to the next key levels. But of course, at any time, we are very much overextended to the downside, and a bounce or retracement of key levels makes complete sense. The problem is, fundamentally, I'll talk about it now, fundamentally, there is zero likelihood that we will get. If we imagine for the moment, the most important thing is to get the US economy to calm down. And the only way for that to happen on the one side of it is to get Trump out the White House. He's clearly has no clue what he's doing, and has got rid of any people around him who would have been able to give him real proper information, and he doesn't know what he's doing. So he's making the situation worse. Now, the good news is that the individual states are starting to look after themselves. They are stepping up, and they are displaying competency and incredible awareness of the situation. And actually the success, any salvage of the situation, is going to rest purely on their shoulders, despite Trump's unbelievable self-destructiveness. He's actually the problem right now, because if you got rid of him, information would have been able to spread. So the thing is that actually until he's removed, there's unlikely to be any real longer term kind of recovery. So that indicates that this is likely to continue through till November in some way or another. Whether we bottom out and then start to climb, we might find that the market then has an aftershock effect, so maybe it drops a little bit further, then climbs a bit, and then drops less, and then climbs and drops less. So what I'm thinking here is that I have to be prepared for things that I have never seen before, because we've never had a pandemic and an economic crisis at the same time, and therefore I need to be prepared that I will see things in the market that I haven't seen before, like bigger sustained moves, maybe faster drops, bigger drops, greater volatility, that kind of thing. Doesn't mean that I can't still trade with the trend. It just means I need to be more diligent about my trades. And then from a human aspect, again, there's no way to really curb this around the economic impact of it until the US stabilizes. So once the US stabilizes, which effectively means that Trump is out and they can start to slow their economy, even if they can just demonstrate that kind of balance now, then economically at least we can start to recover. Then at least also if we can start to show any kind of cures that might be able to assist us, we can start to recover on that. So those two things, I don't know which one's going to come first, but we will need those two things to happen. So that's very, very important. The markets are continuing to show it. Look at the NASDAQ, which was the most bullish, has come back down now to the 50. So interestingly, looking at the Dow, it's just past kind of its near an area here. Near areas here, they could still find some supports, although I'm still going to keep an eye on those because they will ultimately always find support at a level. The question is at which level. Then as a trader, I'm talking about trading shorter term opportunities, absolutely. As an investor, once the market starts to bottom out, which it could be sometime before the end of the year or early next year, then as an investor, it'll be a really good time to buy. But buying everything, if one was prepared to wait a while and be prepared for the market to go lower, one could buy now and be prepared psychologically for it to go lower financially as well, and then just ride it out. So there are already massive discounts on blue chips already, but yes, as they go further down, they become more appealing as well. So anyway, so the Russell's taken a massive hit as well. The FTSE, of course, setting us right back to sort of pre-2016 levels. The DAX as well, taking quite a significant hit. The French index also back down to 2016 levels. Euro stocks generally there, and the S&P. So look, a lot of this is driven by the US markets. Okay, so it is driven by the markets. It's also amplified, magnified by the pandemic. This is a serious pandemic. It hasn't even got to its worst point yet. This is what I'm worried people don't understand. If this gets to a 20 or 30% kind of saturation point, whatever, within 1 in 3 people has it, then it's likely to speed up from that point because it gets harder to kind of isolate people from that. So it'll spread further. So this is a very potentially global, like this, just the impact of this is unforeseen. So we need to be aware of this. And so we need to take every precaution we absolutely can and deal with both of these as we can. As soon as we can get lights at the end of the tunnel for either of them, we can start to recover from that. And the first thing is getting rid of the virus in the White House and the US administration. Need to get that out, and then we can start to balance out at least the economics of it, which will then be global. That impact will immediately stabilize the markets. So for now, this week, again, I'm incredibly cautious. If I was going to buy it from an investment perspective to wait for recovery over multiple years, if I'm trading it, I'm certainly going to be looking for shorter term trades to the downside. This week, again, the big thing as well is going to be the non-farm payroll, which is the first Friday, the 3rd of April. There is talk of this number being a shock to the system in terms of how much unemployment has occurred just over the last few weeks, and this could create an aftershock. It could, if the market hasn't priced it in, it could create an intense aftershock, which could see the markets plummeting further if there's any more fear and panic. So this is why I'm saying common sense, calm down. Certainly don't go and hoard toilet paper. There are lots of people who haven't been able to get because other people have gone in like idiots and have gone and just pillaged the markets. Just buy. The shops can manage it. If you just buy normal amounts, you can go and get them, and they can deliver and they can put those infrastructures in place, but they've been unable to because complete idiots have been going in there and just pillaging it. So please don't do that. Please stay calm and do sensible things. All right. Have a great week, everyone, and we'll chat to you next weekend.